Preparing for analyst roles at Vanguard interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to work at Vanguard? Vanguard appeals to me because its ownership structure and low-cost philosophy keep the investor at the center of decisions. I value organizations that prioritize long-term outcomes over short-term sales targets, and that aligns with how I approach analysis, carefully, objectively, and with attention to downstream client impact. The analyst role also offers exposure to investment operations, data, and risk. I would bring strong quantitative discipline while learning how Vanguard delivers scale without compromising trust. While answering, connect Vanguard's investor-owned structure, low-cost investment philosophy, client-first culture, and long-term orientation to your own interests, skills, and career goals rather than relying on generic admiration. Question 2. What do you know about Vanguard's business model? Vanguard is best known for index mutual funds and ETFs, but its platform also serves retirement plans, financial advisors, and individual investors. Its unique structure means the funds own Vanguard, so investors are effectively the firm's clients and owners. That supports a focus on scale, efficient operations, and low expense ratios. Revenue primarily comes from asset-based fees and related services, making asset growth, retention, cost control, and investor trust especially important. Make sure to cover Vanguard's mutual ownership structure, funds and ETFs, advisory and retirement services, scale benefits, low expense ratios, and the way client assets and trust support its operating model. Question 3. How would you explain the difference between an index fund and an actively managed fund? An index fund seeks to replicate a benchmark, while an actively managed fund deliberately deviates from one to outperform it after fees. Indexing typically offers broader diversification, transparency, and lower costs, although it still faces tracking error and market risk. Active management can exploit research insights but introduces manager, strategy, and fee risk. I would compare both against the investor's objective, time horizon, risk tolerance, and the likelihood that active skill justifies its added cost. In your answer, distinguish investment objective, portfolio construction, fees, tracking error, manager discretion, benchmark comparison, and circumstances in which either approach may be appropriate for an investor. Question 4. What does tracking error mean, and how would you investigate a higher than expected level? Tracking error measures how closely a portfolio's returns follow its benchmark, commonly through the volatility of active returns. If it rises unexpectedly, I would reconcile holdings, prices, cash balances, corporate actions, fees, and benchmark changes. I would then determine whether the cause was intentional, such as sampling or tax management, or operational, such as a trade or data issue. Finally, I would document the root cause, quantify investor impact, and escalate promptly if controls were breached. Be sure to mention the definition of tracking error, sources such as fees, sampling, cash, corporate actions, and rebalancing, plus a structured reconciliation and escalation process. Question 5. Walk me through how you would analyze a company's financial statements. I start by understanding how the company makes money, because the business model determines which metrics matter. Then I review revenue growth, margins, operating leverage, working capital, debt, liquidity, and free cash flow across several periods. I compare results with peers and management guidance, investigate unusual movements, and assess accounting judgments. I finish by identifying the assumptions driving earnings quality and translating those findings into valuation, risk, or portfolio implications. Focus on understanding the business model first, then reviewing income statement trends, balance sheet strength, cash flow conversion, ratios, accounting judgments, peer comparisons, and key risks. Question 6. What is the difference between net asset value and market price for an ETF? NAV is the per-share value of an ETF's underlying assets, calculated at a defined time, while market price is the price investors transact at on an exchange. The price can trade at a premium or discount because of supply, demand, liquidity, and timing differences. Authorized participants help narrow the gap by creating or redeeming shares in exchange for baskets of securities. In efficient markets, that arbitrage mechanism usually keeps trading prices close to NAV. Discuss NAV calculation, exchange trading, premiums and discounts, creation and redemption, authorized participants, market liquidity, and why the mechanism generally keeps ETF prices near underlying value. Question 7. Tell me about a time you used data to solve a problem. During an internship, a weekly expense report contained inconsistent department labels, making trend analysis unreliable. I consolidated the source files, standardized labels with a lookup table, and used pivot tables to isolate exceptions. I validated totals against the general ledger and found a recurring coding issue affecting roughly 8% of transactions. After presenting the evidence, the team updated its submission template. Reporting time fell by about 30%, and subsequent reviews required fewer manual corrections. Use a concise star structure, quantify the dataset or result, explain your analytical method, describe validation and communication, and show how the insight improved accuracy, efficiency, or decision-making. Question 8. How would you prioritize competing deadlines from portfolio, operations, and compliance teams? I would first identify any regulatory, market, or investor-impacting deadline, then rank work by risk, materiality, dependency, and reversibility. I would clarify expectations with each stakeholder rather than silently making assumptions, break larger tasks into checkpoints, and communicate trade-offs early. For example, a time-sensitive pricing exception would likely precede a routine dashboard enhancement. I would keep a tracker, reassess priorities when new information arrives, and escalate conflicts that cannot be resolved independently. Mention investor impact, regulatory or financial risk, hard deadlines, dependencies, materiality, transparent communication, and a documented prioritization process with reassessment as facts change. Question 9. What Excel functions or analytical tools do you use most often? I regularly use XLOOKUP or index match for reconciliations, SUMIFs for controlled aggregations, and pivot tables to identify trends and exceptions. I use Power Query when repeatable data cleaning is needed, and I build simple charts that make conclusions easy to review. I also add checks for missing records, duplicates, and totals that do not tie. Tools matter, but I focus equally on understanding the source data and explaining what the output means. Highlight practical Excel capabilities such as XLOOKUP, index match, SUMIFs, pivot tables, Power Query, conditional logic, and charts, while emphasizing controls, auditability, and business interpretation. Question 10. How would you value a company using a discounted cash flow model? I would forecast revenue, margins, taxes, reinvestment, and working capital to derive unlevered free cash flow. I would discount those cash flows using a WACC consistent with the company's risk and capital structure, then calculate terminal value through a perpetuity growth or exit multiple approach. After summing present values, I would compare the result with market value and run sensitivities around growth, margins, WACC, and terminal assumptions. The model is only as credible as its assumptions. Cover forecast operating performance, unlevered free cash flow, WACC, terminal value, present value, sensitivity analysis, and the importance of testing assumptions against market and business realities. Question 11. What is duration, and why does it matter for bond investors? Duration estimates a bond's sensitivity to changes in interest rates. A portfolio with modified duration of 5 would experience approximately a 5% price decline if yields rose 1 percentage point, before considering convexity and other effects. Longer maturities and lower coupons generally increase duration. It matters because it helps investors understand interest rate risk, compare portfolios, and position exposures against expectations. I would also remember that credit spreads, liquidity, and curve shape can affect actual returns. Explain duration as interest rate sensitivity. Distinguish Macaulay and modified duration conceptually. Discuss inverse price yield movement, convexity, and how maturity and coupons affect portfolio risk. Question 12. Describe a time you found an error in your work or someone else's work. While reviewing a performance file, I noticed one security's return was unusually high compared with its peers. I traced the calculation to a stale price date and confirmed the issue against the approved pricing source. I informed my supervisor immediately, corrected the file, and documented the impact. We then added a date validity check and an exception threshold to the process. The experience reinforced that independent review and transparent escalation are essential in financial reporting. Demonstrate ownership, careful review, root cause analysis, respectful communication, correction, documentation, and a preventive control rather than presenting the mistake as merely an isolated incident. Question 13. How do you ensure accuracy when working with large financial datasets? I begin by confirming the source, population, date range, definitions, and expected totals. I preserve raw data, apply repeatable transformations, and use automated checks for duplicates, missing values, sign errors, and reconciliation breaks. I investigate exceptions rather than deleting them, maintain clear version control, and ask for an independent review before distribution. For material outputs, I also perform reasonableness checks against prior periods or external benchmarks. That combination reduces both technical and judgmental errors. Talk about source validation, data lineage, automated checks, reconciliations, sampling, exception reporting, version control, peer review, and preserving an auditable record of changes and assumptions. Question 14. What does client service mean in an analytical role at Vanguard? Client service means making accurate, timely, and understandable work that helps investors or colleagues act with confidence. Even in an analytical role, a delayed report, unclear explanation, or unresolved exception can affect a client's experience. I would clarify the request, understand its purpose, communicate realistic timing, and take ownership through resolution. I would also protect confidential information and explain limitations honestly. Strong service is not simply being agreeable, it is delivering dependable outcomes. Connect client service to accurate and timely outputs, clear communication, empathy, ownership, investor impact, confidentiality, and translating technical analysis into useful decisions for internal or external stakeholders. Question 15. How would you assess whether an investment portfolio is appropriately diversified? I would examine exposures by asset class, sector, geography, issuer, currency, factor, and liquidity rather than relying only on the number of holdings. I would review correlations and concentration thresholds, then compare the portfolio with the investor's objective, horizon, and risk tolerance. A portfolio can hold hundreds of securities yet remain concentrated in one industry or factor. I would also test stressed scenarios, because correlations often rise during market shocks and diversification may provide less protection than expected. Mention exposure by asset class, sector, geography, issuer, factor, currency, and liquidity, while considering correlations, concentration limits, investor objectives, and diversification's limits during systemic stress. Question 16. What is the difference between active risk and tracking error? Active return is the portfolio's return minus its benchmark return, while active risk describes the variability of that difference over time. Tracking error is the most common statistical measure of active risk. A portfolio can have positive active return with low or high tracking error, depending on how consistently it deviates from the benchmark. I would monitor both, because outperformance alone does not reveal the risk taken to achieve it or whether that risk was intentional. Clarify that active risk is commonly measured by tracking error. Distinguish active return from active risk. Explain benchmark relative positioning, and connect the concepts to portfolio construction and monitoring. Question 17. How would you respond if a senior stakeholder challenged your analysis? I would treat the challenge as an opportunity to test the analysis, not as a personal criticism. I would walk through the data source, methodology, assumptions, and controls, then ask which conclusion concerns the stakeholder. If I found an error or unclear assumption, I would correct it and explain the change. If the analysis remained sound, I would present supporting evidence and limitations respectfully. I would document the final approach so future users understand the basis for the conclusion. Emphasize curiosity rather than defensiveness, revisiting definitions and assumptions, presenting evidence clearly, acknowledging valid corrections, documenting changes, and escalating only when material disagreement remains. Question 18. What is a mutual fund's expense ratio, and how does it affect investors? An expense ratio is the annual operating cost of a fund expressed as a percentage of average assets. It is deducted from fund assets, so investors experience its effect through lower returns rather than usually receiving a separate bill. A 0.20% fee may appear small, but the impact compounds over decades, especially in retirement accounts. I would compare expense ratios among genuinely similar funds while also considering tracking quality, services, tax efficiency, and portfolio construction. Explain operating expenses divided by average assets, how fees reduce returns, the importance of compounding and scale, exclusions such as transaction costs, and why comparison requires consistent strategy and service context. Question 19. Tell me about a time you worked with a difficult teammate. On a group project, a teammate repeatedly delivered data late, putting our presentation at risk. Instead of criticizing them publicly, I asked about the constraint and learned they were unclear about the required format. We agreed on a template, interim checkpoints, and ownership for each section. The next submissions arrived on time, and we completed the project without reducing quality. I learned that addressing ambiguity early and setting visible commitments often resolves tension more effectively than escalation. Use STAR, avoid blaming, explain the underlying work issue, show direct and respectful communication, define responsibilities, and quantify the improvement or lesson learned. Question 20. Where do you see yourself developing over the next 5 years at Vanguard? In the first years, I want to build strong foundations in financial analysis, data quality, investment products, and Vanguard's operating processes. As I become more effective, I would like to own recurring analyses, improve controls, and contribute to cross-functional projects that enhance investor outcomes. Longer term, I hope to become a trusted subject matter resource who can explain complex issues clearly and mentor newer analysts. I am ambitious, but I want that progression to be earned through dependable results. Describe a realistic progression from foundational technical skills to ownership, cross-functional influence, and deeper investment or operational expertise, while showing commitment to Vanguard's mission and continuous learning. If you are still with us, congratulations! You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.